FAIRtax is coming, don't stand in the way. FAIRtax is coming across the USA. FAIRtax is coming, clean up this mess. We got to get rid of the IRS. Hey, hey! Hey, hey!
Hello and welcome again to FAIRtax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
And we are the FAIRtax Guys. And we're going to have some fun today on this episode of FAIRtax Power Radio.
Yes, we are. Yep.
A couple of episodes ago, we kind of did a little role playing of what you might be hearing from, shall we say, less than honest candidates in their presentation of what the fair tax is going to be. And you're going to hear a lot of that during this political season. But there's something else that we really want to deal with. And this is a presentation. I assume it's still being given. I haven't seen it in a while.
I have not heard from this fellow in quite a while, so I'm not sure.
This is a fellow that we're not going to call out by name, but we are going to mention that he was from the doing this in the Ronald Reagan Republican Assembly under their auspices, and was going out with his presentation called "The Flaws of the Fair Tax." And what's really funny, you listen to him and you see stuff like this, and you realize that in order to argue against the fair tax, you have to twist it into something that it isn't.
Yeah, and Bob's being very nice here when he's saying twisting.
Okay, well, we'll go there. But we've got several points that were brought up in this flaws of the fair tax presentation that we want to touch on if you ever hear this thing. And so you'll know what the real truth is.
Yep. Okay.
We're ready to go?
Get into it? Okay.
All right.
My wife and I heard this fellow several years ago. Fortunately, my wife is a very good note taker. And after we heard his presentation the first time, we wrote all this stuff down while it was still fresh in our minds. And we actually sent it off to the board of directors of the Florida Fair Tax. So I've got this file on hand. His first comment was that FICA is not a tax.
Now, that's the Social Security payroll deduction that comes out of your paycheck to support Social Security.
That's right. According to he and his sidekick, FICA is not a tax. It's a payment on an insurance policy. If the fair tax removes the payroll taxes and FICA, then every individual will need to replace this after at his or her own expense.
That's half right. The fair tax does get rid of the FICA deduction from your paycheck. It eliminates your payroll taxes that support Social Security and Medicare. It does not, capitalized and double underlined, does not eliminate the programs. It actually puts them on more solid financial footing.
Absolutely. Now, remember that we've mentioned before that FICA is probably the most regressive tax there is out there. It's waged at the implemented at the same percentage, no matter how much you're making, up to something like $118,000, and then you don't pay it anymore. So the people who are just getting by and are earning just enough to support their families, they have to pay the same percentage as people who are making over $100,000 a year.
So this thing is actually supported by and large by the people who can least afford to do it under the current system.
Yeah, and this nonsense that FICA is not a tax, it's an insurance policy. Can anybody show me their policy premium, a policy number?
Every insurance policy I have has my name on it.
Yeah, exactly, and a policy number. All right, this is completely bogus. FICA, it's been in the courts several times. FICA is a tax. That's how FDR got it started back in the 30s by saying that, well, he told the people it was an insurance policy, but when they went to the Supreme Court, he said, no, it's a tax, and Congress has the authority to levy a tax.
Where have we seen that bait and switch before?
Yeah, that sounds vaguely familiar. So, yes, FICA is a tax. It is not an insurance policy. And Congress does have the authority to levy this tax. And they've been doing it for, 60, 70 years now. And there is nothing that says Congress has to give you these benefits, when you retire. Now, if they didn't, there'd be a revolution on their hands. But there's nothing that says that they have to reimburse you anything, any percentage, anything.
Well, another big problem is that the money that was collected for Social Security was supposedly put in the Social Security, quote, lockbox. Congress raided that lockbox and spent the money.
Yeah.
You can't do that with an insurance policy. You can do that with your tax revenue, but you can't do that with an insurance policy. So that point is just totally off the track.
Bob is absolutely right, and that's why we like the FAIRtax, because it kind of puts it out of Congress's reach.
Yeah. Now let's hit on the fact that the FAIRtax does not eliminate Social Security.
Absolutely
How it puts Social Security on a firmer financial footing.
It would, because it's written into the bill, and you can go online, you can go to fairtax.org, and you can look up the language of the bill. It's only like 133 pages, double spaced. And if you find if you can, wade through the legalese, there's a portion in there that says a certain percentage of the proceeds of the FAIRtax must go to Social Security and Medicaid. It's right around 35%. Must go. So every nickel that's collected of the FAIRtax, collected by the vendors, sent to the states, and then sent to the U.S. Treasury, every penny of that, about 35%, 35 point something percent, must go to Social Security and Medicare. Well, that means that every transaction, every sale, and every payment for service around the country by everything, a certain percentage of that FAIRtax that's collected is going to support Social Security and Medicare.
So the tax base extends from just current people who are working for wages and make under the cap.
Yeah.
That's who's funding it now. That extends that tax base to everybody who buys things, or shall we say everybody whose spending is above the poverty level.
Yeah. Currently, wealthy people who earn dividends, they're not contributing. There's no FICA on those things, all right? They're not contributing to Social Security and Medicare. Only, as Bob says, only the people that get W-2s. Those are the only people that are supporting Social Security and Medicare. Under the FAIRtax, everybody, every purchase of new product and every purchase of a service in this country will be contributing towards Social Security and Medicare. Tremendously broadens the base for supporting Social Security and Medicare.
So it should be clear to any clear-thinking person that the idea that the FAIRtax eliminates Social Security and Medicare as well, that those programs go away, that's only something an insurance agent would tell you that wants to sell you something to replace it.
Yeah, that's
exactly what happened here.
It just so happens that the sidekick for this fella who was talking about this part happened to be an insurance agent.
And the fellow we're talking about is a retired lobbyist too. Let's toss that in as well.
Yeah, that's true. That's
okay,
true.
Well, let's move on a little bit. We've had some fun with that one, but if you go to this presentation about the flaws of the FAIRtax, you'll undoubtedly, in the course of the evening, hear the claim that, well, the FAIRtax really doesn't have all that support because all these several of these Congress people, I'll just sign on to co-sponsor it just to get the crazies off my back, and they're not really true supporters of the FAIRtax.
And that is so disingenuous. I mean, there are people. I'm my congressman, all right.
He's not talked to Ted Yoho, has he?
That's right. We interviewed Mr. Yoho. He's not only a co-sponsor; he is a true supporter. Remember, he carries those prebate pocket cards around in his not pocket cards, business cards around in his pocket. Pulled them out during a town hall and said, everybody needs to learn about this FAIRtax. He does that over and over again. So, but that's just one person. There are some very, very good people, like we've mentioned before. We have now 83 co-sponsors in the House and the Senate. It's a good start. We obviously need more. So we're going to say that most of those people are disingenuous. That's kind of a blanket condemnation of a lot of our Congress people.
Yeah, but think of all the people that we have tried to get to come on as co-sponsors, and another Florida congressman that's in my mind at the moment that I'm not going to name. We have been trying for years to get him to sign on to it. He claims to support it, but won't sign on as a co-sponsor. So if there are people like him,
yeah,
the FAIRtax may actually have more support, guys that would vote for it if it comes up, but I'm not going to put my name on the bill.
That would be the guy who's the only Florida member of the House Ways and Means Committee, right?
No, that's not who I'm thinking of.
Oh,
but
okay.
I'm
That's
thinking
another
of
one.
my congressman over here on the east side of Marion County. But, we've been working on him for a long time.
Yeah.
But anyway, there are people who will. I'm sure there are people who will vote for it if it comes up, but they're not going to support it.
Well, let's
not,
back
not
up a
support it.
little
They're not
bit.
going to co-sponsor it.
Several years ago, when Rob Woodall, who is the primary sponsor in the House, Rob Woodall is a congressman from Georgia. He won the election in the same district that John Linder, and of course John Linder and Neil Bortz wrote the several books on the fair tax. All right, so Rob Woodall was his chief of staff, and when Mr. Linder retired from Congress, Rob Woodall ran for that district, and he was successful in winning that election, and he's won a couple of times. He came to our meeting here in Florida. We had a statewide meeting of fair tax leaders. Rob Woodall showed up and said, when I get co-sponsors for the fair tax, I don't want fair weather friends. I want people who are serious co-sponsors. So I make sure that they really do mean to co-sponsor, not just do it in name. So, this man who was doing the flaws of the fair tax is contradicting what Rob Woodall told us. And I believe Rob Woodall. And I believe that the co-sponsors are very serious people. And serious supporters of the fair tax.
It just seems preposterous on the face of it to me that a congressperson would co-sponsor a piece of legislation, i.e. put his name on the thing on the public record and say, I support this, if he didn't mean it. I mean, why would I'm just going to co-sponsor it so the crazies will quit bugging me? Just does not hold water.
No, it doesn't. It doesn't. He's really disingenuous. And like I said, I heard from Rob Woodall personally that he gets true co-sponsors. He's just not after anybody who will co-sponsor the thing. He wants real supporters.
And if you really want to see what kind of support the fair tax has, just go out to PopVox and take a look.
Yeah, that's right. That's a great website, popvox.com. You go there. You can actually look at any pending legislation. We encourage you to take a look at H.R. 25, and in this Congress, it's S-155. In the new year, that second number will change. The Senate they'll come up with a different number. But you can look in there and see who the co-sponsors are in both the House and the Senate, and you can contact them. Especially now, and if you find out that your congressman is not a co-sponsor, you can write to them, and we're always encouraging people to do that. Hey, I've studied this fair tax thing, and I want to know why you're not a co-sponsor.
Yeah,
right?
What is it about the income tax and the IRS that you love so much?
Yeah.
If I ever get to go to this congressman's town hall, I'm going to ask him that question.
Yeah, that's a good question, Bob.
But
yeah,
that's
I know now the person you're talking about, and he needs to be asked that over and over again.
Well, we've been working on him for a long time. We'll get him eventually, I hope.
Yeah.
All right, let's move on here. Another item that will show up in this flaws of the fair tax is something that we've heard before, and it's really more a question of semantics than anything else.
It really is.
The fair tax is not like the regular sales taxes that you might be used to, or if you take a $100 item off the shelf at Walmart and the state sales tax is 6%, they charge you $106, i.e. they add on the cost of the tax to the price of the item at the cash register. That's called an exclusive tax, which means that the tax is not included in the price. It's tacked on afterwards. The fair tax is an inclusive tax, meaning that when you pick up an item off the shelf at Walmart or wherever else, and it says $100, that $100 includes the fair tax. They're not going to tack on another, and the fair tax rate is 23%. They're not going to make a $100 item become a $123 item.
And this is just like our current income tax. When you get a job someplace and you contract, let's say you're a salaried employee and you contract with your employer and your contract says you're going to get paid $50,000 a year, okay? Are you going to take home $50,000? No, because that $50,000 includes the taxes that you'll be paying. you're going to be taking home about maybe 75% of that, roughly.
Yeah, if you're taxing income, your taxable income times your tax rate equals how much tax you pay.
Yeah.
And if the fair tax does not tax income, it taxes spending. So if you take your spending multiplied by the tax rate, that's how much tax you pay. It's exactly the same as the income tax.
Yeah.
But
the people who want to demagogue the fair tax, they'll say, well, it's not really 23%, it's 30%.
Yeah, 23% inclusive rate means that for every $100 you spend, 23 of those dollars are fair tax. So that's 23% of what you spend. That's a 23% inclusive rate.
Inclusive.
What some of these other folks look at is, well, in that particular example, you've got a $77 item to which you have added 23% sales tax. If you look at it that way, if you take the fair tax and calculate it on an exclusive basis, i.e. add it on to the price, then they do get the 30% that way. But it doesn't matter. It's the same. It's the same money, same $23 you're paying.
Yeah, exactly. How does it make a difference in your pocketbook or your wallet? All right. Does it make the item more expensive? No. Does it change the amount of the fair tax that you're paying? No. It's just a way, as Bob started out saying, it's a semantics issue, and it's a way of trying to demonize a really, really good plan. So it is an argument for the sake of arguing.
So anytime you hear somebody saying that the fair tax rate is 30%, they are, in effect, twisting the fair tax into something that it's not. They are changing it from an inclusive to an exclusive tax.
Yeah.
Dishonest.
Yeah, and it's the same amount of money. You know what? That example that Bob used, you buy something for $100, which includes $23 of fair tax. Added into it. It's going to be the same. It's still going to be $100, and whether you call it 23% inclusive or 30% exclusive changes nothing except your argument. It doesn't change anything from your wallet. It changes nothing in your expenses. It's the same amount of money. So, like I said, that's an argument for the sake of argument.
So whether it's 30% or 23% just depends on how you look at it. And the way it's written, it's inclusive. 23% of everything you spend is fair tax. That's a 23% inclusive rate. Let me touch on something else here that's similar to that. And that is, you'll hear the argument, the fair tax is going to raise the cost of everything we buy by 30%.
Yeah. Well,
yeah, he hit on that a time or two.
Yeah, that is when the fair tax goes in. First off, we have to talk about the embedded costs. All right, we've talked about this before. Right now, the tax code is so convoluted, so difficult to keep up with, that it costs companies a great deal of money to make sure they're complying with the tax code, to make sure that they're paying everything that they should be paying, and no more, to make sure that they're not overpaying the taxes. Because if you're in business and you're overpaying for something, whether it's your raw material, or if you're overpaying your employees, or if you're overpaying the income tax levied on your business, then you're not doing very well for your business. So the cost of complying with the tax code is very high. And you put that with the cost of the tax itself, and everything has something like 22% on average. It's more for some industries and less for others. But everything you purchase and every product and every service you pay for has an embedded cost of around 22%.
Yeah, it's just like if you've got your embedded tax liability plus your compliance cost, or just like any other cost of doing business, just like the cost of materials, the cost of labor, whatever. All of your costs of businesses are rolled on down the line into your prices. And if you take that away, they won't tell you, some of these folks won't tell you that the fair tax replaces that particular component in the prices, because it gets rid of the entire income tax system. So there is no longer any income tax that corporations have to pay. The compliance costs go almost down to zero, so that is a huge expense that is no longer being passed to you. At the retail level, it's replaced by the fair tax. Prices will remain fairly stable. They may rise a bit, but they're not going to rise anywhere near 23 or even 30% like these folks are saying.
The best estimates from our experts like Karen Walby, they may rise 10 to 13%. But
You'll have more money in your pocket to deal with.
That's right.
No more withholding.
We're going to get to these and some of these other issues.
And you get the prebate. We've touched on that a ways too.
It's not, in other words, it's not just as simple as how the price of products is going to change, because it's a dynamic issue. Yes, the price of products is going to change, but so is your income. And everybody's going to have more disposable cash.
So you will have more purchasing power under the fair tax, even if prices do go up a bit.
And we did a whole episode on relative purchasing power, didn't we?
Yeah, we did. Now, let me kind of stay on a related point here. We're talking about the embedded costs of the current tax system and our current prices. This guy, if you go to this Flaw of the Fair Tax presentation, will try to tell you that the embedded costs due to the current tax code, when they go away, it's the corporations are just going to, there's a windfall. I'll keep my price the same as it is now and just pocket all that.
Oh, I love this one. All right. Apparently, he believes that when the fair tax is passed, we're going to enter an alternative reality. Okay? Yeah. Right now, we have competition. Companies compete with each other. If they're making similar products, they have to be very wary of what their competition is doing. Anybody's offering a sale, they get their raw material at a discount price, whatever. They have to be very, very competitive. But according to this guy, when we pass the fair tax and their costs of doing business go down, there's no competition.
Yeah, he's talking about the wholesale prices are going to stay the same because the wholesalers and manufacturers are just going to keep their prices the same, even though their cost of doing business drops dramatically under the fair tax. And then, of course, that's reflected at the retail level, and that's why he's saying the prices at retail level are going to go up so bad, but they're not, because the wholesalers and manufacturers cannot get away with that. The free market just won't let them do it.
No, it won't. I mean, that's what I was saying. Apparently, he believes we're going to enter an alternative reality where there's no competition and the companies can just willy-nilly set their own prices. If that's the case, under the fair tax, if their prices drop, their costs drop, but they don't lower their prices, if they can do that under the fair tax, why don't they do it now? Why don't they just adjust the price any way they would want? How about if we go to the gas stations tomorrow and all the gas stations in town have raised their price to $5 a gallon? What's the chances of that happening? Zero. All right? Companies must be competitive. They may be able to get to work the tax code, and if they have a good tax attorney and CPA, find all the loopholes, to reduce their tax burden, but they cannot escape competitive market forces. They have to pay attention with what other companies, their competition, are doing.
Yeah, we've seen this before. There was a while back, there was a special 9/11 security fee or something that was embedded into the cost of airline tickets.
Yep.
And that expired.
And you know what was good about that, Bob? It was put into a fund that Congress couldn't touch. Does that tell you something?
But the guy that's doing this Flaws of the Fair Tax is right about one thing. Corporations may be tempted to try to, my cost went down. I'm not going to pass that on. I'm going to keep that myself. And the airline industry tried to do that for a while until one of them, and I don't remember which one it is, says, all right, I want a bigger market share. I am going to pass that saving on. And before the end of the week, everybody else had to follow suit. The free market would not let them do that.
Exactly. And Bob states a very excellent example. And when he says they held the prices up for a while was like 48 hours.
Yeah, not long.
No, not long. Because like he said, one particular company decided, our costs have gone down, and yes, we are going to lower our ticket prices. Yeah. And even a few bucks, like $5 or $10, that has an effect.
I think in real life, if the income tax goes away and those costs go away from manufacturing and stuff like that, there will be a rush to see who can drop their prices the quickest, to try to jump on that market share bandwagon as early and as heavily as they can.
And the nice thing about this is that whatever happens, when the company's costs do collapse or increase, when their company's costs do decrease, and they can decide, all right, what are we going to do with these savings? We can lower prices. We can raise employees' pay. We can. There's all kinds of things. It's not going to be the government that tells them what to do. It's going to be their interaction with their employees, with their customers, with their other companies. It's going to be competitive market forces that dictate what is best for that company. And it may change from one industry to another. It's fine. It'll work itself out. People have a habit of doing that. Okay? So it'll be free market, competitive market forces that determine how the prices are adjusted. The estimate, like I said, the estimate is that prices will go up maybe 10%, but then again, compare that to your increased spending cash, because you're not going to have any withholding and you're going to get the prebate. So you're going to get a raise in pay there.
Yeah, you'll get a lot more money in your pocket under the fair tax. So even if prices do go up a bit, your purchasing power is going to be much higher. Studies have proven that over and over again with the fair tax.
But this nonsense that the companies will just pocket the savings, that's so naive. It's laughable.
That flies in the face of reality. You just can't do that. And
that's not going to happen.
Unfortunately, I tell you what, we've had so much fun here. The clock has just flown by on us on this one. We have several more of these things, so we're going to do another episode of the Fair Tax Power Radio and continue with this.
Yeah, there's a lot of good stuff
rebutting the flaws of the fair tax. But for now, let's get on board with how folks can get a hold of us. Our email address, thefairtaxguys@gmail.com. We're on Facebook. We have a special The Fair Tax Guys page there, and you can see from that page why we're on the radio and not on television. And what else you got over there?
Well, we encourage you to support the National Fair Tax Organization, or whatever state you live in. And we encourage you to support the state. But most important, go to bigsolution.org. bigsolution.org. They are actually in the process of remodeling that site and making it a little more efficient, a little more clean. But click the connect button. Make sure that your information is in there so they can send you Fair Tax Friday and any important updates. And then we also ask that you contribute. And we really ask that you contribute on the 1040 Club, in which you commit to sending them $10.40 a month. The sustained membership like that, the sustained contribution, will really, really help the Americans with fair taxation. For fair taxation, they need to show that they have a steady cash flow every month to pay the bills, and when they do that, there's some deep pocket donors. Remember when we talked to Steve Hayes?
You heard Steve Hayes talking about that. And if you haven't heard that one, back up to the previous FTPR episode and listen to that.
Yep, that's right. So that's very important. That sustained contribution is very important. So we ask you to do that. If you want more information, we mentioned PopVox, popvox.com. There's another one called congress.gov. Congress.gov, you can set it up so that if there's a change to some important, like there's more co-sponsors or something, to any important legislation that you care about, it'll send you an email. Let's see. Get your fair tax gear. Go to fairtaxlogostore.org. fairtaxlogostore.org. You can order caps, shirts, pens, even fair tax sticky notes.
Now, how would you like to have a way to support the fair tax and it not cost you a dime over what you're going to spend anyway?
Yep.
FairtaxRewards.com.
Yeah, FairtaxRewards.com. If you're going to order something online from, say, Walmart or Target or Sears or whatever, and you're going to go down to the store and pick it up, this is becoming more popular. You find out exactly what you want. You read the reviews on it. Okay, that's the one I want. Click the order and click the thing that says I'll pick it up at the store here in town. Go to FairtaxRewards.com first. Go through that website, then order your item, and what happens is that you get a small stipend, a few pennies, is added to your account. But more importantly, the fair tax, the Americans for Fair Taxation, they get a stipend too. So it's a good way, another way of, like Bob says, supporting the Americans for Fair Taxation without costing you an extra dime.
Yeah, it's a small step. You go to the Fair Tax Rewards site. From there, you can see the list of the other different websites that you can go to, and it's all alphabetized. It's easy to do. It might take you an extra 30 seconds to order something, but it helps you and it helps the fair tax.
Yep,
we
good simple way to do
definitely
it.
encourage you to do that. Oh, mercy. We just about got to wrap this up with this edition of FAIRtax Power Radio. Again, thank you so much for being along. And we'll be back with some more of the flaws of the FAIRtax that aren't really flaws. They exist in somebody's mind. We'll be digging on that here in just a moment.
They're just a lot of fun for Bob and I to talk about.
And again, the FAIRtaxGuys@gmail.com. We'd love to hear from you. Until next time, I'm Bob Paxton.
And I'm Ron Malero.
We are the FAIRtax Guys, reminding you that the FAIRtax is America's big solution. And once you understand it,
you'll demand it.
Fair tax is coming, don't stand in the way. Fair tax is coming.